The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials up 278. We have the NASDAQ up 88. S&Ps are up 29. Gold is down $1.20, trading at $11.20. We have the Platinum up $13 at $1,003. Bonds, the 10's down 11 ticks, 30's off 1.5, and good old King Dollar is down 220 ticks. Some of the just the higher volume stocks at this point in the marketplace. You have Apple's up $3. They're going to be pushing out a lot of PR in the next couple days. You got Walmart. That's a big jump. Walmart's up a couple bucks. You got Citigroup up 82 cents. Inside the Dow Industrials, which is giving the Dow some juice right now. And by the way, folks, I don't think these markets are going to hold at all, which is going to really flip some people out because of the fact that you got that bump up at $300 on the open. So the leader inside the Dow Industrials right now is Walmart. Walmart's the leader. That's up $2.10. Followed up by Apple. That's up $3. You get Intel up 77 cents, and Microsoft is up $1.12. The only Dow stock right now in the negative is Chevron. That's down 39 cents. Exxon is up 57. Caterpillar is up 61. Inside the NDX 100, strength versus the weakness, this is what you have. Strength, JD.com, that's up $2.50. That's after getting smoked. You got Regeneron up $25. Man, that Regeneron, man, loves to go up and down $20 in a heartbeat. So that's just amazing. That's how it trades, though. $20 each way. You got NXPI up $3.69, and you got Cerner Corporation up $2.27. There's only two stocks right now that are negative inside the NDX 100. That's Green Mountain, that's down $1.10, and you got Netflix down $1.03. If we do go over and take a look at Netflix, what happens, folks, NFLX, as you take a look at the certain equities, and you can pick anyone you want out, actually. Some of these large caps, though, and some of the leading stocks are basically screaming that you're not going to be able to get out of this downdraft that was on the 24th. Now, what we have is this with Netflix. The opening price on the 24th was $88. The trading price out there was like $96 to $100. We're at $97.70 right now. Netflix is going to go right after the low that was established out here on Friday, which is $97.34. We'll see whether we blow it away, but thus far it looks like he wants to take it out and go after not necessarily the low just yet, because it's hard to tell whether that low actually was hit. But bottom line is that you're going to be in a whole nother range. Netflix looks like it's going to start making its way down to the $81 area, which in itself is just pretty intense, no doubt about that. We'll go over to Walmart. Let's go take a look at Walmart. Walmart is the mover inside the Dow Industrials out here. And what you have with Walmart this morning, Walmart is trading at $65.96. Bottom line, Walmart's down from $85, so you're still down $20. We'll see whether Walmart can handle $66.15. Where the $66.15, folks, is where Walmart, like the rest of the market, got blown apart on the 24th on the way down. 66.16 was the high, and the low of that day out there is the $63 area. Dow right now is up 263. You get the NASDAQ up 86. S&Ps are up 27. If you caught it was pretty wild this morning on CNBC. So Leon Cooperman, who's a large money manager, a very successful money manager, and normally has quite a bit of common sense behind what he has to say. About 2 weeks, I guess last week. Last week he wrote an editorial, an opinion piece in the Financial Times. And what the opinion piece was about is machines gone wild. So his fund is down quite a bit, like the rest of these funds that, in the marketplace that's supposedly hedge funds, but in fact they're long funds. And he was blaming the aspect of machines, on everything, basically. The thing that was amazing is that, and this is, there was a couple different things that happened in the interview. He's on for 2 hours this morning. The biggest one, though, looking at it, I'm saying to myself, this is amazing, that it's got to the point on financial TV, no two ways about it, they bring him on, and in his case, I thought it was the first time that you could see fear. The fear was incredible, number one, and the blaming of the aspect that machines are taking over the marketplace, and that the marketplace, and he's claiming that the retail traders are going to get hurt. Bottom line, folks, is when markets go down, they always got to blame someone. The machines were helping the market go up for 6 years. Each and every dip that was going down, guess what? The machines were buying. In fact, one of the tigers in the den, my man Jay, he was, of course, we've been bears for a while, and it was interesting because last week he had just put something over and said, yeah, it's just the opposite now. And I started thinking about that, but this morning when Cooperman was on, I really realized that, guess what? Mathematics, okay, and that's what machines are all about. What has happened is that when they kept buying the dip, well, guess what? That was everyone buying the dip, including the machines, jamming it up. Well, guess what? The most amount of money now can be made where? On the way down. So guess what? The machines are going to do it all the way down. The hedge funds are going to do it all the way down. Anyone in their right mind is going to do it all the way down, because that's where the most amount of money is going to be made, and then you recycle the whole deal again. It's just like planting a seed. You plant the seed, the tree goes up, you cut the tree, starts again. Guess what? You get to those levels, folks, and that's how it works. So the correlation, listening to these guys, though, and then, this was one of the best parts. I was working out with Nico, and when he's saying this part, he was explaining that fundamentally everything is absolutely great. And listen, I'd agree. I'm not disagreeing on that. One has nothing to do with the other, with the marketplace. And what he said is that they had a meeting, all these high-flying money managers. And there were 24 of them in the room. This happened 2 weeks ago. There were 24 of them in the room, and every single one of them absolutely said no recession's coming, absolutely said everything's great. Well, guess what? All you have to do is redial back to 2006 when the whole world was on crack, okay? Bottom line, folks, get your stops in, okay? Because after hearing that, it was like, oh my God, they're trying to stabilize the market and get out of the market as quick as they can. That's what this is all about, okay? And CNBC is basically, pushing the whole agenda simultaneously at the exact same time. So, there's really no. The thing that's intriguing about all of this actually is that you have China that definitely wants to basically manipulate their markets. We just happen to have financial press that absolutely wants to do the same thing at the same time. What I did like is that Sorkin, and I think sometimes he's in wonderland. But the bottom line, what Sorkin had said to Leon, he says, well, we hear everyone, including you, claim that the market itself, okay, is based on fundamentals, but yet now that's going down, you're saying that this is not based on fundamentals because of the fact that, the machines have taken over. So how does that work? Bottom line is that the gist of it kind of goes, folks, that fear and greed is in the marketplace, always has been in the marketplace, and the aspect of what markets are worth versus what the economy's worth, it's not even close. My take is that that's not even close. If you happen to be watching Tiger TV, I think Koopman just turn the lights off on me. No. Those lights will be right back on, folks. The Dow right now is, there it is. See that? The Dow right now is up 257. You get the NASDAQ up 97. S&Ps are up 26. If we go over and we take a look at those E-minis, let's go take a look at where we're shaking out with those babies right now. Yeah, no, okay, so we do a 10-minute. And what you're going to see is that the first sell down already occurred. And this is going to be just really crazy watching this whole thing shake out. So, yeah, and you got it with volume, man. So watch this. Oh, man, this is going to be crazy. Okay, so the E-minis thus far, folks. Okay, this is what we did. We've hit 1961. You're at 1949. But someone just hit this again, and they hit it good. They hit it with 55,000 contracts at 10 o'clock. You know, this thing is set up. Once it gets back inside, it only needs 5 more points. You get back inside 1944, bingo, you're going to be down to 1933 in about a heartbeat, which is going to put a shocker once again inside the marketplace. Why is it going to put a shocker? Because now what you have, where is the excuse going to be this time? The excuse is that we're back. It's after Labor Day. It's supposed to be regular trading. You know, all of the above. Last night in China, what you had in China, if we go take a look at Asia, what you had in Shanghai was up 2.92%. And guess what, folks? That was up. Yeah, as soon as you come back, I'll bring this up for you so you can see at the end of their session how the government just came in and bought it. Big deal. They're toast, folks. Get the peanut butter jelly out, get the cream cheese out, and spread it out. We're going to be right back. Dow up 262, NASDAQ up 83, S&P's up 27. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of some of the Dow stocks, let's take a look at them. You got them all green up here. We got American Express up $1. You got Boeing up $2.95. You get Exxon up 82. Citigroup's up 90. You got Disney up $1.87. IBM is up 250. Honeywell's up 208. Big Mac's up 127. 3M is up 229. And we go over and let's go take a look. We'll put this right inside the diamonds, okay? So if you take that whole correlation, you look at the ETF structure and say, okay, tell me what you're doing. Well, guess what, folks? The diamonds have already rejected the price. The diamonds traded to a high price out here today of 164.43. Right now, we're at 163.57. It's pretty amazing that it looks to me like they're going to trade under 163.13. Now, what would happen if that's the case? The high of last Thursday was 165.49. Now, they couldn't make the high, but if you close under the low, that is a whole sweet little setup for what? That's a sweet little setup that it wants to go after once again, because this is what we have here, is that on the 1st of September, which was, I guess, that was last Tuesday, right? Tuesday, Wednesday, Thursday, Friday. Yeah, last Tuesday. You had high volume swing low. So we're going to go after that high volume swing low. I'm not even talking about the 24th high volume swing low. So it looks to me that the way this market is set up out here today is that more than likely you're going to get a reject of actually the lows of the third, not the highs, okay? It didn't even make the highs. You get a reject of the low, which would get you down to this 163.13. And that's going to be a little bit easier to do. The reason that all you have is you're inside the gap. And right now, we're already inside the gap. The gap we're talking about is this. Friday morning, we gapped lower. Thursday, we had closed at 163.67. We gapped lower on Friday. You gapped higher today, and you're already back inside the gap. 163.69 gets you inside the gap. When you fall into a gap like that, and you couldn't get the higher price, your probability gets a lot higher that as you go through the trading day, you're going to get sucked back into that gap. Now, let's go over and we take a look at the oil market. This oil market, folks, has been so wild. It's unbelievable. So, it'd be really nice to catch this baby. So, oil. Right now, we're trading at 44.85. You've pulled back You want it's pulling back on lighter volume. You know, we came off the bottom of 37 bucks. You go straight up to 49. I'd still let this get into about 42.86. You know, you're coming back with dramatically lighter volume, by the way. When we hit a high out here, we hit the high on the 31st, folks. We hit that high with 758,000 contracts. We pull back, you know, thus far today, you only have 219,000. You're pulling back into 689. I'd still let that thing get a little bit lower. Let's go over and take a look at ExxonMobil and see how the two giants between Exxon and Chevron are setting up. Yeah, see, Exxon right now, so check it out. Exxon's up 92 cents. Volume's way too light. You know, you're talking about 3 million shares. Last high up here, you're coming into 34 million. 3 6s are 18. This will do all about 18, 19 million. And that's doing the same thing as actually the Dow's doing. You know, we'll see. It couldn't even make it to Thursday's high. Thursday's high was 74.91. You've made it to 73.72. That in itself is a big texture. Go back over to the NQs for a second, because I want to share something on the NQs. The NQs, the NASDAQ, haven't broken down yet, where the E-minis have. And I want to show you just something here. 1 second. Let me see. And I'm talking about an intraday basis, but they haven't broke yet, but they're building some cause to break. So if we put this on a 10-minute, where you know, each and every day it's been a little bit different. First, it's the E-minis that break, then it's the NASDAQ that breaks. So what you have is this, is that the NQs, they did not make it to the highs that were generated last week. You got the spike. The NQ's got to get under the 54 area, and right now you're at 71. I suspect that's going to probably take another 20, 30 minutes. You get under that 54 area, you get some real action on the downside. Dow right now is up 276. NASDAQ's up 88. S&Ps are up 29. You stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 268. You get the NASDAQ up 86. S&Ps are up 28. We take a look at percentage-wise. This is what you have. In Europe, you get the DAX up 1.9%. France is up 1.4. The FTSE's up 1.2. Our markets, the Dow is up 1.6. NASDAQ's up 1.8. S&Ps are up 1.5. Now, let's get over and we take a look at the dollar index. This is a trip in itself, folks, because if we pull up the dollar index, what you're going to see is that the dollar is having a very rough time getting over not just a swing point, a very minor swing point. So the swing point on the dollar, let me put this on a daily for you for a second. This is pretty wild. So the swing point on the dollar, right now we're at 96.05. The swing point on the dollar, and by the way, that's still not even it is a minor one, which is 97.10, which is the high that was generated on the 18th of August. What the dollar hasn't been able to do is even handle the 96.35 level. Now, when we came down on the 24th, you were fast, furious, and all of the above, and you have a high volume swing low. Now, this is where what we all may think, or I may think, okay, fundamentally versus technically what's going on. Technically, this thing wants to go lower. Fundamentally, it almost doesn't make any sense. So I understand that argument in a second, meaning that, okay, if we're going up in rates, you know, all of the above, the dollar should go up. But guess what, folks? What's happening, and this is not a speculation, what is happening is that if you Google anything about what's happening in China, they have the largest reserves in the world, and they're selling dollars. And they're selling dollars because that's the only way that they can keep the yuan from imploding, okay? So that correlation seems to come out of nowhere, and it does come out of nowhere. So my point is this. It's so weird that, you know, if you even use common sense and look at something, because this dollar deal has always been like, for the last 6 or 7 months, it's like, okay, what's going on? You had the extension of the dollar. Everyone, the whole world thinks the dollar's going to keep going up. And then you come out and trying to keep selling it. That's the first part. Now check out the second part, though. This is a trip. The second part of this come together for me this morning. And this is what it is. If you go, we had talked a couple years about dollar bonds. What was going on with dollar bonds, right, is that the most amount of dollar bonds were getting issued in Europe about 3 to 4 years ago. And what that means is this, is that you get large corporations, they're borrowing in U.S. dollars because the interest rates were low, okay? But guess what? They have to pay back in U.S. dollars. So those companies are basically paying back a lot more than they borrowed. Well, guess what has happened? what has happened, and this is what's so bizarre, it's unbelievable, is that if you go take a look at the last year, it is the most amount of U.S. companies that are borrowed in euros. So now what's going on, okay, is that they went over there, they borrowed in euros thinking that, well, the rates are much cheaper. There's no doubt, because when we take a look at this rate, so watch this, they're still cheaper, by the way. When you take a look at the rates, what you're going to see is that our 10-year is at 2.1. Okay, Germany's is at 0.6%. Spain is at 2. You got, let's go to the UK. UK's at 1.8. So the bottom line is that you're still cheaper. But guess what, folks? What's going on now is that the correlation is that between China selling dollars, between our companies borrowing more in euros, guess what? It's putting demand into the euro. It's taking supply off of the dollar. They're going to have to pay back euros. Bottom line, there's the correlation. It's a supply and demand correlation. You know, we'll see whether the dollar can make it up and over here. What has happened is that it hasn't been able to handle it. Now, the last few days, inside the dollar index, the dollar hasn't got any juice on the way down either. That's the first time that's happened. But my take, bigger take, the dollar's going lower. The dollar looks like it not only wants to go to the 95 and 94 level, it looks like it wants to go down to 85 level, which is going to be a shocker in itself. It's like, okay, what's pushing that baby down into that much lower level? 877-927-6648. Let's go take a look at the NDX 100. We'll take a look at the 3 Qs inside the NDX 100 as to what their correlation is versus last Thursday. Because last Thursday's the number, folks. You had the 3 Qs have been as high as 104.83. They've given up 70 cents thus far. The high that was generated out here on Thursday was 105.02. Didn't even get close to it. What we have happening right now is it looks to me that, number one, here, we'll put this on a 10-minute. You'll see what's happening here. It's built just enough cause to basically get under the 104.10. And, you know, when you get under the 104.10, what you're going to see, and you'll see it pretty quickly, you'll get down to the, my God, you can get down to the 102. No, well, the first stop would be 103.71. You get into 103.71, guess what? It's going to be wide open for the 102.69. So I expect you're going to see the volatility continue out here. You're going to see the market continue to basically back off here. Pretty wild. Gold. Let's go to the gold contract. So what do we have with gold? Bottom line, the gold contract is flat out here. Gold continues to build cause. And, you know, what we had out here this morning, which is cool, which we needed, we got to a lower low. We rejected 11.16. We hit 11.14.70. Now, the day we rejected was the 26th of August. You had 207,000 contracts. It's going to be close to whether we do that. We're at 102,000 right now. Most of the time, let's see, 1040. No, we're not going to do another 100,000. Hey, well, we'll find out. But bottom line, most of the time, you're not going to do 100,000 between the 10:40 a.m. because most of the contracts will come in by 1:30. You'll get another 10, 15,000, 1:30 to 4:15. But most of them is going to be done now. It looks like it's already rejected lower price. We'll have lighter volume, and we'll see what kind of juice it can get into the top side. Thus far, you still don't have any buyers there. Silver. Let's go over take a look at the silver market. Silver has saved silver has saved not only themselves a few times. I mean, the silver market itself, it saved gold a few times too. It's hammered it, but it saved it. So if we take a look at this silver contract right now, yes, we're trading at 1466. You know, you're inside the 1442 area, but silver needs some wide price spread. There's not enough juice. You know, silver did the same thing. It got to a lower low, rejected it. Now we need wide price spread. You need wide price spread, accelerated volume. If we do go take a look at the GLD, what you have inside the GLD, it's a nice setup. You pull back and rejected the lower price. You only have 1 million shares. The 1 million shares are coming into 10 million. So that essence there is a decent setup. We go back over. Here you go. Here you go. This is going to be a crazy market, man. This is a trader's paradise, folks. A gift from the trading gods, and it just keeps giving. The NQs just broke down. Here we go. NQU5. What you're going to see. Yep, there she is. That same operator or a different operator just threw it right into them. So you're going into the 54 area right at it right now, and it's getting a lot of volume. So next stop is the 43. We're at 42.53. 42.43 is the next stop. You come down with this type of juice, 54.40. Yeah, you can make a case. I can make this case here that you're going to go back to 25, which would be a mind blower. That would put the NQs up 25. Let's go over and take a look at the ES for a second. So you're up 24. We're at 46. The high was 61. Yeah, see, it's amazing, man. It's just every day it's a little bit different. But the ES are leading the baby right down right now. So the ES just broke 40. Oh, it didn't break 44. Okay, we're at 1946. You break 44, which I suspect it's going to. The reason being is that, let's see, you got 4 minutes. Yeah, we got volume. You get 4 minutes. We've already done 30,000 contracts. It only has to do 55,000. You got an ABC down, small one, but it's a decent one. It's 59 to 47, so you get $12. Gets you to 40. Yeah. 1940. There's an ABC down to 12. 1940 right now. It's going to need 55,000 contracts. We'll see if we get that at the end. It's going to be easy to do, actually, though, because we're only at 4 minutes into a 10-minute bar, and you've done 44,000. So there's going to be a lot more selling on the way down out here. Some of the let's go back into the Dow Industrials. We'll just take a look at the strength and weakness inside the Dow, because you're going to see this correlation, how this correlation changes throughout the day. So check this out. This is pretty cool. The Dow is up 300, and one stock was in the negative, and that was it. That was Chevron. Now, folks, you're only up 236, and they're all in the positive. What does that mean? That means that they're in the positive, but guess what? They've given back dramatically more. Inside the NDX 100, what do we have inside the NDX 100? Inside the NDX 100, different ball game is happening. When we first brought it up, you had two stocks that were in the negative, Netflix and Green Mountain. Now you got Dollar Tree. That thing's been getting killed. Expedia is down $6. Netflix is the leader. Netflix is down 317. Netflix is screaming that this market wants the 24th for NF. The 24th, NFLX. Netflix right now is at 95.40. Pretty amazing. The low of the 24th was 85. It looks like Netflix wants to go after 81.25. And if you have Netflix, folks, okay, you want to watch this series. It's a 6 series. Narcos. You have, it's about Pablo Escobar. Start watching it last week, man. There's 10 episodes. It's like, you know, I remember that time when this was happening, but I guess I never realized like how crazy it actually was. It's a crazy series. There's 10 episodes. I think I'm on number 7 right now. It's hard to believe though that this thing actually did happen. It's great. There's no two ways about it. Market-wise, this we have happening up here. You get the Dow up 235, Nasdaq's up 71, S&Ps are up 23, and the S&Ps have given up quite a bit. We'll see if they can get the next leg down, but I suspect right now that what you're going to see, yeah, they can't handle it. They can't handle it. They're right next to the 44 right now. You're at 45.50. You get inside the 44, you're going to be at 37 and a heartbeat. This is some serious giving up on price. And it's pretty. What is amazing is that when you wake up in the morning and you see the futures up $36, you see the Dow up 300, and you think that is a lot. But you got to remember where we are in the context of where we were. You know, the S&Ps were at 21, 26 going back 2 weeks ago. Bottom line is that, you know, they just the last three highs. So check this out. The last high that was generated last Thursday was 1973. We made 1961 today, and right now we're in 1945. The high prior to that was on the 28th. That was 1992. The high prior to that was 2103. So it's problematic. I mean, it's problematic in spades too. Now let's go to the XLF, because the financials folks had given it up, and they're the last ones to give it up. The XLF right now is trading out at a price point of 23.10. We got to 23.15. Oh, we're at 22.96 right now, actually. We got to a price point of 23.34 last Thursday. The amazing part about the XLF, it doesn't even look like the XLF is going to be able to do 50 million shares today. You know, so they got it up to 23.15. It's sold off thus far. Bottom line, this also wants to basically at least test the 22.50, which was the low that was generated on September 1st. You know, we'll see whether it gets down to, you know, many of these spike lows inside the ETF structures, you know, really weren't where there was a lot of trading that occurred. What you did have when we opened the 24th, some of those ETFs, they maybe did 100, 200,000 shares, who knows what they did, down at those levels. They certainly weren't big numbers down at those levels. Some of the higher volume stocks out here, Netflix is a leader on the way down. That's down 317. You get Facebook up $1.15. We got Walmart $1.70. That was up over $2. That's giving it up. Apple, keep your eye on Apple, because Apple is not going to be able to hold price. Right now, Apple's at the 111.78 area. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow up 243. NASDAQ up 76. S&Ps are up 24. Gold is flat. Silver's up 12 cents. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow Industrials right now up 245. You get the NASDAQ up 77. S&Ps are up 25. And don't forget, folks, our man, Mr. Basil Chapman, is going to be coming up next. Growling and prowling with you. Then we got our man, Mr. Steve Rhodes, Dave White, and I will be back this afternoon from 3 to 5. Now, if we go over to the S&Ps for a second and take a look at those, the E-minis, this is what you have happening. We were talking about the last 10-minute bar on those S&Ps. We end up doing, it needed 55,000 to do an ABC structure on the way down. We did 48,000. So bottom line, what do you have? It's going to try it again. We're at 1946. You stand on 1947.50. Guess what? You're going to get it. So it's trying it right now, and what it's doing, which is a trip. So check this out, folks. This is really cool. So the last bar down, we did 48,779 contracts. We're into this bar, and it's trying to get higher, and we're to it by 5 minutes, and you're only at 18,000 contracts. That's your correlation. So you double it, you're at 36,000. It's not going to make it. What does that mean it's going to do? Guess what? It's going to go after the low again. More than likely, what you're going to do, you go sideways here, 3 or 4 or 5 minutes, right? It's going to go gun after that. Your probability gets much higher that you're not only going to go take out the last swing point from the last 10 minutes, which is 44, but you're going to get into the 37 mark. And right now, you're at a 45.50. And that correlation, by the way, has to do with how you go down versus you go up on a 10-minute inside the futures market. It works with equities futures. It doesn't matter. But the consistency of it over the course now of an hour and a half is pretty intense. That consistency is saying, guess what? You have more sellers than buyers. If we go take a look at the NQs for a second, what you're going to see inside the NQs. Now, today what you have is that the E-minis are what are leading us down. The NQs are basically, are staying up better than the E-minis. Thus far, what we have is that they really, they have not broken inside the 43 area. The NQs have to get back inside the 43 area. What we just did have, though, is that last bar that the S&Ps had, NQs had the same thing. So that's 4251. They're doing the exact same type of setup, and that's saying that the NQs aren't done on the way down. But the NQs would have to get back inside the 43 before that wants to get down into the 17 area. What I do expect you're going to see, however, is that as we move through the trading day, you're going to see that start to accelerate. And the problem for the NQs happens to be Netflix. You know, Netflix, weighting structure-wise, is a good weighting structure inside the NDX 100. And the Netflix broke an ABC structure on the way down and did it with volume. It's a small one, but it's 106 to 97. No, it's $9, which gets you to 91. Right now you're at 95. Not 10 gets you to 93.50. Right now we're at 95.23. You get a small ABC structure on the way down to 93.50. So I expect that's where that baby is going to try to get into. We go over and we take a look at the GLD. The GLD, folks, has rejected lower price. You have lighter volume. Bottom line is that this thing still wants higher price. So it's going to be interesting how this whole thing shakes out coming back, because of course right now we get trading right now going right up to Thanksgiving. You stay right there, folks. I'm Mr. Basil Chapman's going to be coming up next. Growling a problem with you. Dow Industrials up 252, Nasdaq up 80, S&P's up 26. Have a great one. Have a safe one. Look forward to speaking. Right back here this afternoon, folks. Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.